there, fellow traders. Welcome back to our channel. Today we're diving into the exciting world of the Commodity Futures Trading Commission, or as we cool cats like to call it, the CFTC, and its awesome COT report. If you're serious about trading, you're going to want to stick around for this one. Alright, so first things first, what the heck is the CFTC? Well, think of them as the referees of the trading world. They're the ones who make sure everything stays fair and square in the futures and options markets in the US. So you better believe they're important. So picture this. You're sitting at your trading desk, sipping on your favorite brew, and suddenly you remember it's COT report time, baby. But where do you even begin? Don't sweat it, because we're about to break it down for you step by step. Now, let's talk about the star of the show, the COP report. COT stands for Commitment of Traders, and basically it's a weekly report published by the CFTC. This bad boy gives us a snapshot of the positions held by different market participants, like commercial hedgers, large speculators, and small speculators. First, let's talk about how to get your hands on that sweet COT report. It's easy peasy. Just fire up your browser, head over to the CFTC website, it's cftc.gov, and navigate to the market data section. Then click on Commitments of Traders. There are several types of reports: the legacy report, the supplemental report, and the disaggregated report. Each one gives us different insights into the market. So it's like having 3 delicious flavors of ice cream to choose from. From there, you can see the whole US market details of energies, goods, metals, commodities, and also wheat, coffee, and sugar trade positions and details. You can download the latest report in text file format. And just like that, you're one step closer to mastering the Forex markets. We need to navigate the CFTC website, market data, and the commitment of traders, and look for the Chicago Mercantile Exchange. Then looking for futures only, and then we need this, a short format. Click on this link and you will see that messy text file. Now I know what you're thinking. Staring at a text file full of numbers and jargon can be about as fun as watching paint dry. But fear not, my friends, because we're going to make sense of it all together. Within that text file, you can look for your desired asset. Then you'll find a treasure trove of information about the total O position. That open interest black box, and positions held by different types of traders. 3 types of commercials, non-commercials, and retail positioning details. Okay, let's dive deeper, my friends. I break it down real quick. Commercial traders are the big boys. Think banks, corporations, and hedge funds. They're in the market to hedge their business risks, so they're not usually making wild bets. Non-commercial traders, on the other hand, are the speculators, the big players who are in it to make a profit. And last but not least, we've got the retail traders. That's you and me, folks. We're the little guys trading for our own personal accounts, and they are not important to us. Looking to 3 trader categories: long and short open interests %. You will see the difference between positions held by them and a tiny share of the non-reportable table or same retail traders. As you can see, non-commercial long open interests are opposite to non-commercial short open interests. And on the contrary, non-commercial short positions are opposite to commercial long positions. The non-commercials sell and buy assets from commercials. So I think you understand which group of them we are looking for. Yeah, you are right, the non-commercial or same speculators. In the report, you see the long and short contracts or positions by these 3 types of traders. We need to understand the net position of traders by subtracting 2 numbers of long and short position to calculate the net positions of large speculators' contracts. A positive number indicates that most traders agree to buy this asset, and on the contrary, a negative number indicates that most of them are willing to sell this asset. Now here's where things get really interesting. Why do we care so much about those large speculators in the Forex market? Well, my friends, let me tell you, they hold the key to unlocking market sentiment. You see, these big dogs have deep pockets and can move the market with their trades. So if you see them loading up on a particular currency pair, you better believe there's a good reason for it. By paying attention to their positions in the COT report, you can get a sneak peek into where the market might be headed next. My friends, let me tell you, this report is like having a crystal ball for your trades. By analyzing the positions of large speculators, especially the net positions, you can get a sense of market sentiment. Are the big players bullish or bearish? That's the million-dollar question, and the COT report has the answer. Are you thinking that visiting this site every week is a bit complicated and time-consuming, or it's a bit difficult to manage and use this data? How can we check this sloppy data every week and save its changes? Every week on paper or in an Excel file? None of them. Why the complicated way? We store and analyze this data on our website, Ziwox Terminal, every week. We present the results of the data for you in the form of easy to understand and simplified graphs so that you can easily understand how many percentages of important Forex assets are being bought and what percent are being sold, which one is more attractive to them, how much they have changed in the last week, and whether it is time to sell or buy again for them or not. Yes, this is one of the features of Ziwox Terminal. In our Ziwox Terminal, we print the COT report details on any asset pages. For example, in the Ziwox Terminal, the main page, look at this area on the USD page. You see the details of the net position of large speculators' net position. How many changes from the past week, and also the details of the long vs short position ratio. Also have a history of commercial and non-commercial net change for years. Let me show you some more details. It would be interesting for you. Go to Ziwox.com and click on COT Analyzing page. By looking at our COT report system, we categorize main Forex assets and currencies in a beautiful table row. Assets like Swiss franc, Japanese yen, Australian dollar, CAD, NZD, British pound, bitcoins, oil, gold, and more. We break the details to show the commercial long and short positions, a number of positioning changes from last week. Even we bold the large speculators, non-commercial long and short positions and changes from last week, and a simple bar to show the long vs short contracts ratio to indicate the asset's midterm sentiment. That is what we focus on every week with the net position of assets and a number of net changes during the week. Usually any positive number more than 2 or 3,000 contracts is important to us. It shows the potential of asset price change because a huge number of contracts changed. A positive number indicates a bullish and a negative number is a sign of a bearish movement. And there is another interesting data in this page. As you understand the technical analysis, it's good for us to know the percentage of long versus short ratio and the situation of overbought and oversold areas for them. For example, the franc Swiss sold a lot and a reversal movement is possible for it. I mean a bullish reversal. And usually we are waiting for good news or economic release data for franc that causes the short position will be close in the future. So we knew about the futures about position unwinding. I mean close sell contracts and buy some more Swiss franc. This week we have a lot of long positions on gold. So it shows us we have a bullish sentiment for gold. But in risk on market sentiment, traders should close the long position on gold contracts and push the price to the downside. It's just an example for you to understand how we use these data. We also have other deeper details that just get from those messy text file numbers. You have a 52-week history range of open interest. Wow. It gets you the maximum long and short position range or over positioning in a year history range in an asset. Fantastic, isn't it? But the better news is this. You could reach this wonderful data on your MetaTrader chart as well. Wow, imagine. As we were going to introduce you to the details of the training related to our Fundamental Trader Expert Advisor, we provide the COT, report net position and net changes. It is one of the features of our Fundamental Trader Expert Advisor. And now you have learned how to sail your boat. Drop in the mainstream and open your trades with the Market Genius. We display the number of buy and sell positions on the currency. Net changes compared to last week show you the potential for price changes. For example, in this EUR-JPY chart, the addition of 11,531 more positions to the Japanese yen caused more strength on the pair quote and made a sharp drop in the price of this currency pair. Let me show you another example. In this AUD-USD chart, the addition of 13,004 positions on the Australian dollar represents this sharp growth on this currency pair. And 235 short positions on AUD show you the medium and long-term positioning of traders on it. With these details, you can find out the total number of traders selling the AUD, but in the last week, they tended to buy it by 13,004 long positions. Did the light turn on in your brain? You can easily trade with the market giants and increase your success. When you mix it with your technical chart, especially when the price is near the main support and resistance, the COT data plays the golden role in your decision. And there you have it now, the lowdown on the CFTC and the legendary COT report. So next time you're making your trading game plan, don't forget to consult this treasure trove of information. Trust me, your future self will thank you for it. Thanks for tuning in and happy trading, amigos.